Hello, welcome to today's stock market analysis. My name is Steven and thanks for joining me on this journey to try and discover where the stock market is going. Now, every day before you start trading and looking at stocks in the US market, there are three major indexes that you should look at. Number one is the Dow Jones, and then the S&P 500 and the Nasdaq Composite or Nasdaq-100. Because 75% of stocks in the US market will follow the direction of where the Dow and S&P and Nasdaq will go. And many major indexes around the world also is affected by the performance of these three major indices. So if the indices crash or plunge, you can be quite certain that indexes in Asian markets will also follow. So it's very important for us to look at the Dow and US indices no matter where we are. Now I have in front of me now what we can see is the Dow Futures. As you can see, the Dow Futures had a very nice trend run up from, well, basically the most of 2017 up to late January has been a very nice smooth run up. But then in early February, the stock market collapsed, and now we are in a very volatile trading period. Okay, but as the market trades, it is most likely starting to form what we call, what chartists call, a triangle pattern. Now, I've drawn two lines here. One is the downtrend line, and the other one is the uptrend line. The triangle, when the triangle happens, the stock market will experience what we call volatility contraction. The base of the pattern will be very volatile, and then eventually the swings will get smaller, and then the market will trade up to near the apex, and it will either break out or break down. Now, we don't really know in which direction the market will break out into, but according to textbook and from experience, the triangle breakout will usually resolve itself in the direction of the previous trend. So if we zoom out a bit, the previous trend we can see is an uptrend. So the bias here is for a bullish breakout, and as it approaches the apex, it is also a timing tool for us to know when the Dow is likely to break out. So it's going to be very soon. Either it will break out or break down. Now sometimes the market, you can never predict how it moves. Sometimes it may just go up a bit and then break down and then only shoot back up, right? There's no certainty in the market, so we have to take it. Sometimes we just cannot predict what the market is likely to do. Now, but the price action right now is telling us that if the Dow is able to stay above this trend line, this uptrend line, okay, and trade, it is likely that it will break out higher. Okay, now let's take a look at the text, the Nasdaq-100 Futures. Now the Nasdaq-100 Futures, the Nasdaq, it is stronger than the Dow. As you can see, the move down here, it is able to recover almost all the losses that it have, and now it's staying at the top 1/3 of the price here. So what we can say is that the techs are now leading the market, and usually when the techs are leading the market, it's quite a good thing. We can draw something like this to connect the lows and the highs here. Now, this is not a very clean ascending triangle. It's actually a very wide ascending triangle, but you can see a bottoming tail here, right? The market rejecting to go lower during that day. If the Nasdaq is able to trade around here and then break out, then it will be bullish for the markets. Now let's take a look at the S&P 500 futures. The S&P 500 futures is look quite the same as the Dow. You can actually draw this trend line that connects most of the highs and lows, and as you can see, yeah, it's most likely forming a triangle which eventually will break out or break down. And since the previous trend is up, that's why the bias is bullish. Now I want to show you a chart of the IWM. Now the IWM is the small caps, ETFs or small caps. Now as you can see, the IWM is also much more stronger than the S&P 500 and also the Dow. What we can do is we draw this line here that connects the low, and then we draw a line here. Actually, it looks quite like a ascending triangle. Now, it might not be a clean one. It's really quite wide, but as what you can see is that the small caps are making a higher low here, and it recently broke out of this resistance area. So this area, around 154 to 155, this area will be a support. Okay, if it goes up and corrects, it will be a support for us to watch. And the IWM has also recovered most of its losses at the top 1/3 of this entire move down. Let's take a look at the mid caps as well. Now the mid caps, we can also say that it is trying to break out of this pattern like this. I'm not very sure whether it's a very clean ascending triangle or not. Usually if like that, I won't be trading it. I like clean one, nice one, but for the purpose of analysis, we can still draw a triangle like that. I found support here, and then there's a bullish engulfing here, and then it went higher. So if it continues to move higher, the mid caps will, this area will form a new support. In the event that it corrects, you will find support here, which we can look for, and hopefully it bounces up higher. Now, I show you the mid caps and also the small caps because I want you to know that this rally is not only powered by 10 stocks or 20 stocks of the Dow or 50 stocks, but since there are 400 mid caps and 2,000 small caps, you know, it's already a broad market participation, and this is something good. And the other thing I want to show you is the semiconductors. Now the semiconductors has actually broken out to new highs. It's very obvious. Now, one of the things of intermarket relationship principles is that when the semis lead the market and when the techs lead the market, I've shown you the Nasdaq-100, it is stronger than the Dow or the S&P. Okay, when the techs and semiconductors lead the market, right, usually this is a sign of a bullish market, and therefore it is more likely, right, that the Dow and the S&P 500 will continue to make new highs, and that's something for us to think about. So I've been trying to keep this webcast short below 5 minutes, but I think I've overshot it. So anyway, I hope this analysis is helpful. Happy investing and happy trading. My name is Steven, and I'll see you in the next one.